Good evening, everybody. This is Jeffrey Scott, and it is actually Saturday, which is a day early, March 8th at about 10 p.m. Since it's Saturday, we can assume that the future market is not currently open. And I'm doing this on Saturday because I'll be at an educational program the next couple of days in Palm Beach. So I have three thoughts about today's market: surprising strength, market rotation, and increased volatility. And I also threw on the bottom something that, words that I hope that you can grasp and words that I live by from Ian Woodward of Be Your Own Guru. Sort of as the purpose of why I do these programs is to help encourage others to take it upon themselves to learn and to manage better than anybody else can for you. You know what? I'm going to just realize that my screen wasn't started yet, so let me go ahead. All right, so again, sorry for the second delay there. So again, Jeffrey Scott, March 9th, 2014 is the date there, but I'm doing this on March 8th, which is Saturday. Disclaimer: the session is for educational purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments, and I am not affiliated with any software vendor or trading company, and the tools I demonstrate are tools that I use in my daily trading, and I have paid for everything that I demonstrate. Upcoming, the big meeting in Palos Verdes, March 29th through 31st. I can't stress enough about how great of a meeting that is. I go to twice a year. I've been going to twice a year forever. I've been paying to go twice a year forever. I participate some, as will Gil Morales this year. But this is really Ian and Ron's show. It's just a great opportunity to learn some really good stuff from two great teachers. And as most folks know, this is probably Ian's last live PB meeting. Website, www.highgrowthstock.com, has information under events about this workshop. The other thing I want to announce is that 1 week from today, on March 15th, at 10 a.m. Pacific time, which I guess would equate out to 1 o'clock Eastern time, I'll be doing a joint webinar with one of my investing guru heroes, which is Gil Morales. And Gil is author of Trading in the Cockpit with the O'Neill Disciples, also Trade Like an O'Neill Disciple. He's the one that introduced us, along with his partner, Dr. Chris Katcher, to Bible gap-ups and pocket pivots. He's got a very unique and impressive and successful way of looking at the market, and he also is a user and fan of HGSI. So he'll be presenting first, and then I'm going to present about 30 minutes after him, after he's finished, for 30 minutes after he's finished, showing how I've incorporated his tools into HGSI and how I use them in my nightly review. You can register with the link that's here. You could also just go to highgrowthstock.com, the website, and register there. We've expanded the room for this meeting, so hopefully nobody will get turned away. Yes, it will be recorded and posted in the usual places. This should be a lot of fun, and certainly appreciate Gil taking his time on this Saturday to help us out. Don't need to spend a whole lot of time here. I'm all about Be Your Own Guru. I find smart people who influence me, and I try to learn as much as I can from them. And you notice I've knocked out Pascal Lane's book because I don't think it makes it to my top 10 of investing books anymore. But I did replace it with Jesse Stein's Insider Buy Super Stocks. Just another philosophy of how to find great stocks early on in their lifespan and holding on to make a lot of money. Jesse sort of is extremely honest in his approach, and he talks about how much money he lost along the way as well. Ian and Ron, Woodward and Brown Investing, Alexander Elder, Morales and Katcher, William O'Neill, Van Tharp, Minervini, Bigelow are some of the folks that I've really tried to, as I said, learn as much as I can from and then become my own guru. I have a lot of toys, a lot of programs, but what I need is a live trading platform, and I use both TradeStation and Thinkorswim. Most people know I have an indicator set for TradeStation. I'll be doing a follow-up webinar and posting it on YouTube and in my Dropbox when I get done with this one, just to review how I use the indicator set that I've offered for sale. For those that are coming to the meeting in Palos Verdes, almost everything I can do, although with some of the nuances between Thinkorswim and TradeStation, can also be done in Thinkorswim. And if you come to our live meeting in Palos Verdes, you'll get all the tools for Thinkorswim. The TradeStation is still my tools. From an analysis perspective, I use HGSI as my end-of-day analytic machine. EdgeRater is another tool that I use for both market analysis, backtesting, as well as some screening. I like seasonal analysis. I use both Magenta Trader and Best Choice. I'll show you some of the output from Best Choice tonight, although from an overall program, I like Magenta Trader. Hopefully it'll build into the calendar functionality that I like, and which is why I keep Best Choice around. I also use MarketSmith. They have great fundamentals, some additional screening, and clean charting. I'm not going to spend much time on this because you can always stop it and write things down. But I use a lot of different resources, whether they're trading rooms where you have the power of hundreds of eyes chatting among themselves about what they're seeing, with moderators such as Boxer, Bigelow, Fitzpatrick, Minervini. I use a number of websites. Briefing.com is where I get my news during the day. Gil's website, he has a Sunday and a Wednesday night updates. Ian, when he puts his blog out. Many of the trading rooms also come with email and text alerts. I also get Ron Brown's OneNote. I do a couple of freebies, which are the Yahoo groups for HGSI and Magenta. Skype chats with George Lee, which is actually a paid service that he does with his following. And then one option is a product that I use intraday and also pre-market for scanning. What we're going to do is most of what I do on the left, which is my top-down review. When I look at the market, I identify leading industries and then the best stocks within those industries. I always supplement my top-down review with the bottoms-up. I use the group inclusion filter, sprinters, and I also now talk about the last several times how I use the squeeze and the MOBO. EdgeRater helps to understand the market, also has some stock picking. I scan Magenta Trader to look for things with seasonality. I look at my TradeStation scans. I review earnings and news at end of day. I watch my movies, which come up nightly from many of those trade rooms, and I update my watch list. When I'm sitting at home before the market opens, I review the news in multiple sites. I do my scanning. I go to my chat rooms. I look at my TradeStation scans as the market opens up, and I jump right in. Now, my toolbox are things that I've accumulated over the years from Ian and Ron, how they've adapted some of the masters, such as Richard Arms, John Bollinger, Alexander Elder, Morales and Katcher. Ian's brought a number of things to us. In the Gang of Five I participate in were 5 of Ian's disciples that came up with the bongo. From George Lee, he introduced me to David Elliott's Mobile Breakout and Breakdown, and also his variation of John Carter's Squeeze. I use these tools to target my setups. My favorite setups are pullbacks in an uptrend to support. I look at bongos in force. I like to see squeezes, and free parking is pulling back and basing at the 50-day moving average. To find directional changes, I might use DI crossovers, MACD divergence, and failed new highs and failed new lows. And from momentum perspective, the kahunas, pocket pivots, Bible gap ups, PSAR reversals, and the MOBO breakouts and breakdowns. There are many indicators that each of us use. I try to be consistent across the different platforms. This is predominantly what I use. The PSAR reversals are not currently available in HGSI, but I've been promised that they're coming shortly. Everything else is now available in HGSI with no upcharges. I always show you this, and I always ask, where are we? Every time I think we're rolling over into the greed, we take off with another leg up. The same thing seems to have happened, and here we are kind of getting to that topping looking stage. And will we get good news during the week that boosts us, or will we get bad news that pulls us down into this pullback, which all of us are expecting and anticipating, but nobody knows exactly when it's going to happen. We might look at signals by looking at some of the leading indicators. These are the Canaries, as you can see, Priceline, Apple, Amazon, Google, Tesla, Facebook, LinkedIn, Netflix. And from this leg of the market run going back through July, these have been clearly the leaders. We make a proprietary index of these using HGSI. Our Canary index shows really going sideways for the last 9 days in the market. There was a viable gap up. It's really held the bottom of the gap up and riding up the 8-day exponential. So I can't really say anything bad here. It's paused. The question is it paused to refresh, or is a rollover coming? And I guess we'll watch and see. The LLURs are an actively picked list at our last October meeting. Should I think about that? We're now at about 5 months since that meeting, 5.5 months. And you could see that our index, which we chose back in here when we thought the market was topping, and the reason this index was chosen, they were to be leaders in the market at the time. And you can see how our index has continued to run up. There's been some high-profile blow-ups in our list of stocks, but others have done quite well. And this is another signal, I think, of a market struggling at the highs, and you can see it's sort of living in the sideways range. And again, are we pausing to refresh, and will we have another leg north, or is a rollover imminent? Speaking of biotech, had a pretty fierce reversal this week, and you can see from the top of the channel we have 1, 2, 3, 4, 5, 6, 7, 8 days in a row. Biotech has moved down. You have a couple of green bars. This green bar actually closed lower than it opened. That would have been on Monday. And basically biotech sold off after Tuesday, which was the one up day here. So biotech has been in a fierce sell-off. So a lot of people are wondering, is it time to get rid of biotech? Certainly some of the older biotechs, such as Celgene, Alexion, Regeneron, Biogen, IDEC, have had huge corrections. A lot of the, like BCRX, some INO, Prana have had less dramatic, but still have pretty strong pullbacks as well. What this chart is showing you is, this is a magenta chart of IBB. I believe IBB or BTK, I can't remember which one, IBB. So this is the biotech, one of the biotech iShares. And so it's an ETF made up of the larger, predominantly the larger biotechs, I believe. So what I have here is starting in January, going through the end of the year. And basically what I did is I magnified, so we only have about a 3-month view here of what the stock is doing. And you could see how IBB, representing the biotech, has been living in a channel. We had a pretty fierce sell-off back here as well. And we've broken below the bottom of the channel. In the yellow line, we see a 5-year line, 5 to 10-year line of what what this has done historically. In fact, let me go ahead, because it's hard for you to read, and frankly, it's kind of hard for me to read as well. Let me go into Magenta and show you what I was looking at, because I think this is an important piece as you might try and figure out what is going on with biotech. I'll tell you, my guess is it continues to run. And that, as it said on the bottom of the slide, biotech is known to have some pretty severe. So here's biotech running up from January, big pull off here in February, huge run up, I think 17.7% gain into April, into the end of February, so in a very short period of time. And now we're in a pretty dramatic sell-off. The trend is still going up. The seasonality is going up. And if you look over the March 21st to the May 1st period, 5 years it's been looked at. 5 out of 5 years, IBB has gone up at this time of year. If I look at BTK instead of IBB, you see a similar pattern where, let me make this 30-day, I can't do it on the size, okay. Where you can see a similar pattern where you see the yellow line, which represents the price prediction line based upon the algorithms that Magenta is using, is pointing north, and the green scanner is picking out a very active area where 5 out of 5 years, again, March 21st, April 3rd, about 5% per year move in that, 3-week period of time. So if anything, we're leaving a period of more sideways and less impressive time for biotech and about to go through a very busy and strong part of the year. That is until the middle of May. Now, what happens in the middle of May, something I know a lot about, because in the middle of May, the Oncology Society, which is called ASCO, will be introducing its, we'll be getting right to our national meeting, and all the studies come out in abstract form a couple weeks before the meeting, and the winners go up and the losers sell off. So it's not a big surprise that come May and June we might have some issues. So the other thing that I put here, let me hide that, is, and my feeling was, probably shouldn't have done that. I don't think that this is it for biotech. I think they run until May, and then a sharp, short duration sell-offs are the norm for biotech, especially among usually those that are not profitable. Other news drivers to expect, you can stop this and write it down if you don't already know, both the news reports of the week, what are the big earnings. You can get this at no charge from Leavitt Brothers. Now, I looked at a lot of different stocks today, probably about 700 this week, and I do it for a number of reasons. One, because I don't have to talk to anybody. I'm just kidding about that. I do it because I really like to get a good sense of what's working and what's not working in the market, and it helps me in finding some of the charts to show you, but also helps me in my own personal trading. So when I look through, trucking seemed to be extremely strong with a number of truckers breaking out. Shoes, strong. Foot line, shoes and apparel retail and shoe stores, Skechers, Foot Line look good. Coors is at an interesting point as well. Auto dealers. Penske Group, perhaps the best, but several of them, Ashbury Automotive, looked interesting as well. Automobile parts, especially OME or OEM makers, Tower, Magna, American Axle, Visteon. Bulk shippers looked interesting. Regional banks started popping up, and defense remains strong. Now, interestingly, you all probably know about Plug and fuel cell. Alternative energy stocks are on fire. You'll notice that Plug, which doesn't make money, does have earning reports this week on Thursday. We'll talk more about those. What did not look strong? Biotech, obviously, was weak. But I'll tell you, a lot of my biotechs and pharmas that I follow, such as Jazz, Valiant, Questcor, the Celgene intraday, Tecmura, Intermune, many of them were selling off Friday, but by the time Friday ended, they either came back to break even or were positive. So I think that this biotech sell-off is probably done. REITs didn't make my list very high. I guess that's not a big surprise. Healthcare stocks in general, the insurance companies did not seem to be weak as well. Gold and silver seem to be weak. So strength, therefore, trucking, shoes and apparels, auto dealers, auto parts, alternative energy, and dry shippers. All right, so now let's take a look at the markets and see if we can't find some places to go swimming. I think last week I forgot to go through my Excel spreadsheets. I'm going to do that very quickly. Yeah, I know you all are thinking, I don't do anything quickly. That's true. But I guess you can always fast forward. Somebody does these videos and then does it at a fast speed so you can go through even quicker so I can sound like a chipmunk. Got to figure out how to make that, to record that way because that'll shorten some of it. So this was a weird week, I got to tell you. Monday was a bad market day. My short positions that I took on Friday balanced out my risk, and I actually made a little bit of money on Monday. Like everybody else on this call, I made a lot of money on Tuesday. And then Wednesday didn't do much for me. Thursday was a pretty bad sell-off. Friday started off bad, and I recovered. So I kind of expected a rather flat week for my holdings. So here's a couple things I found out. The S&P 500 was up 1%, painful 1%. I think it was up 1 or 2 days and down 3, and there he had some big movement days. IBD 50 was up less than 1% at 0.3, although almost 60% were up. HGS 100 was up 1.23, so a little bit of HGS 100. You can see very few of the searches that I use, and some of these are bearish searches. Short bearish divergence, ETSLs are all bearish searches. But very few of my searches had bad weeks. What's interesting is when I did my numbers, I saw that I was up over 3%. And I was sort of perplexed because I didn't feel that way during the week. Now, the stocks that I identified last week as buy watch stocks were up 4.5%. That's pretty impressive, especially when you compare it to the S&P 500. Some of the best of Woodward & Brown, a pre-filtered list of 10 stocks that are given to you every day over the week, if bought Friday at end of day and sold Friday this week. See, we went from the 28th to the 7th. You could see that Best of Woodward & Brown was up 13.66%. Oh my God, what a week that had. Bible gap ups were up 6%. Pentaplays, which are Force Kahuna, Mobile Breakouts, Pocket Pivots, and Bible gap ups were up 6.2%. Smaller, cheaper stocks, moving groups to the upside, was up 4.93%. So it makes me feel less thrilled about my numbers when I see that. But what it tells me is that first I want to know is, are my types of stocks working? Interestingly, I'm working despite the fact the IBD and the HGS list are about the same as the S&P 500. I like to see that the stocks that I identified as potential purchases did better than the stocks I was currently holding, which is probably part of the market rotation. But when I see Best of Woodward & Brown doing so well, I know that our type of investing is working. So let's just take a look at a couple of things here out of curiosity. So I was up 3.01. Okay. So if we look at let's see. Best of Woodward & Brown. Why did Plug up 77%? I own that. Anybody else own that? VIPS up 26. YY up 17. That drove the performance in the Woodward & Brown list. We just go down and take a look at mine. I had some real dogs too, and you'll probably comment, boy, he has a lot of stocks. I do. I also have a fair amount that I invest in. I made the decision to have a lot of stocks when I think the market's going to start to move and less stocks when it's not. These are actually less than I would have had a week ago. So you look top line and you see kind of equal red and black. So you wouldn't have expected much of a good week. But here it is. Plug was up 77%. Techmira was up 38%. Fang was up 19%, 17% for SoFun, 17% for YY, 15% for Sun Edison, 14% for Trina Solar. Tile Shop was up 10. Jinx was up 10. Horizon, one of the best charts in the market, is up 7.86%. And my big loser was ANR, which someday I got to get rid of this dog, but it's almost worth nothing now. Down to 480, was down 10%. So I had some really big winners, and that's why even though overall the market felt kind of tough, I still had a good week. Now, if you're thinking, well, that's not fair. You can't buy them on Friday after hours close. What if I bought the same things on Monday after the market had opened? 15% for Woodward and Brown. My buy watch up 5.61. I would have been up 4.08 on my existing holdings. The reason why these numbers are even better is because the market gapped down. So even though it closed closer to break even, if you had bought at the open, you would have bought at a deep discount. And the S&P 500 that way was up 1.1, IBD 50 up 2%, and the HGS 100 up over 2% as well. I like to look at Hindenburgs. Hopefully don't see any. We don't see any. We go on further. These are what we're testing. We're looking for new high, new lows, both over 2.2%. Rising moving average. We look for McClellan less than 0. New highs can't be more than 2 times new lows. If all those trigger, we get a Hindenburg. We haven't seen one in ages. And you can see there's almost no new lows. These are the new lows on the NYSE. These are the new highs. Here's the absolute numbers. I look at bucketology. What do I see is a very bullish 82% are above the midline of the Bollinger Bands in the S&P 1500. I see that now about 12% are above the upper band. 17% are in the highest decile. We're getting frothy, although it can still get a whole lot more frothy than we see it here. I look at the markets in Edge Rater, and green is good and yellow is bad. And we're starting to see a little bit of yellow in the NASDAQ 100, which was clearly the weaker market this week. You can see over here on percent B, everything is below 1. That's great. When it gets to be much above 1, as we saw back here, we start to get a point that you might expect a correction. George Lee setups, you can run automatically and look for breakouts in squeeze, various types of breakouts. Seasonality, I thought I would throw this in here. This is from Best Choice, and one of the reasons why I keep Best Choice around is it gives me a list of what's working. I'm looking at the April list. The highest rated was PGTI, buying on April 19th, selling on May 3rd. Holding it for 14 days, there's been 7 trades. It's won every time. Average profit has been 29.626%. Fuel Tech, I think, has earnings coming out tomorrow. April 11th to May 1st, 20 days, 13 trades, 12 winners, average profit 25.99%. Might be one you look at. LCI is another one. This is the Lanet that I'm holding of. April 6th to 27, 13 trades, 12 out of 13 winners, 92% wins, 19% returns. So you scroll down here so you can, if you want to stop the video, I'll actually probably post this PowerPoint as well so you can take a look at what I'm looking at. So a lot of bullish trades for seasonality in the coming month. I also looked at bearish trades for seasonality. The best ones are up at the top. And on the bearish trades, there's not nearly as many. And so these consider assuming shorts. A couple of those that stood up to me, Candy, which is at I believe Indian Auto or Chinese auto maker. It's been a big flyer. From end of April, middle of May, 6 out of 6 times. I'm shorting it 1. Average return on a short was 18%. Shorting TZA in April, 5 out of 5 years, 13%. So shorting TZA means the market is going up. Shorting energy or shorting the contrary negative energy, ERY, 12%. Here's one that will affect me. PEIX is one of my giant holdings. It wasn't so giant until the last couple of weeks when it's had a huge run. Gets into a 9 out of 9 negative time in the market with an average pullback or profit of shorting at 12.5%. So I'll look at these in greater detail on my own later as I try and identify additional trades to make. Next, I'm going to pull down my trade station. And I'm going to take a look at, the elder indicators, or really the colors. Here's the S&P 500 blue. I pretty much can do anything buy, sell, or hold. up at the upper envelope, so it's above valuation, so it's not cheap, but it can run up that upper envelope for long periods of time as it has in the past. What I do like is that at least it looks like the line here is probably getting close to where it's to taking out the prior high and perhaps ending the MACD divergence period that we've been. You can see we're in the daily S&P 500, 85.6% of the high jump. The weekly is green. Monthly, you can see the straight line that we've had here also is blue. So I see this. I don't see anything that I naturally love, and it's not without concern because we're up at the high end of the range, but I don't see any overt must-sell signs. I do want to point something out. The day that my portfolio turned around was March 9th of 2009. Tomorrow is March 9th of 2014, and one can see in 5 years we've had a couple of shakeouts, but really just a huge run from let's pull that out of curiosity. So we had a monthly on, if we look at, it's 227. The month ended at February 27, 2009. The close of the S&P 500 was 735. As of the last monthly close to 3/31, we're now at 1878. So, you know how much it's gone up. It's been just a huge move in this market. And obviously, when you get that kind of a move, you expect more shakeouts. NASDAQ, same thing, upper end, hit the lines of the MACD getting up above the prior line, so eliminating the divergences. 84% on the high jump bar, blue, green, blue, same thing I talked about in the S&P, extended, but not to the point where it has to snap back anytime soon, but you would expect ultimately a correction, and similar findings on the Dow, although it doesn't look like they're going to take out either on the histogram. Well, histogram's higher here. Not sure if we're going to have a divergence here because got a higher high and a lower high on the MACD histogram, but the line is clearly higher than it was. So I look at these, I see markets that are extended, perhaps when I tie everything together, starting to get a little frothy. I continue to be leery and expecting a pullback, but you saw how many long positions I have. There's some shorts in that list too, some TZA and VXX, which I like to load up with on Friday. And I have some different things that I do with them during the week. Next, I like to look at the indices in a top-down view. I'm showing about 35 minutes thus far. And the top-down view, as I think you remember, is balanced. It's all technical. It's all price and volume related. Since it looks at a 13-day force, it is going to go back as far as 3 trading weeks to consider, but most of the weighting is done in the last 3 days. So let's go down to Woodward and Brown user groups, Major Markets Plus. So what do we see? We see that the small caps, NYSE, transport, industrials are all up at the top. Gold, silver, volatility are on the bottom. You look at 5-day return, 3.3 for transport, small stocks about 2%, semiconductors about 2%, gold 1.2, and silver for the week was minus 1.3. Worst performer being T-bond iShares, and see volatility for the week was up just a teeny bit. On Friday, gasoline, oil, transports, utilities, industrials were positive. Big negatives, gold, silver, volatility, and bonds. So then I go through and I look at the usual subjects. I use my clear scan view, which is a new view in the add-ons. Make sure I'm pulling up the right version of it here. I'm not, so let me change this to the, I'm already working on updating it and upgrading it. So we'll turn off the fundamentals. So as one would expect, based upon what I showed you a few minutes ago with the market, one sees that after a bingo and a pullback in mid-212, this has been a market that's been pretty much a 45-degree angle straight up. We've had modest pullbacks along the way, and we are in the recovery phase of a pullback that started in the middle of January through the middle of February. So the question is it different this time? And are we going to break out? Are we likely to start stalling and pull back again? And when do we get the pullback that is a little bit more so than what we've been experiencing? And this was one that I think scared quite a few people. But if you go to the high back here and you find the lowest date, which is probably right here, this was only a 6% pullback, but it certainly was painful. And our recovery from this point to where it closed on Friday has been an 8% recovery. So we're back above where we started falling. What else can I say? We're pretty much at nominal new highs for the S&P 500 here. Green on the bongos, there's no volume, so I don't see any force. I haven't had any kahunas or phoenixes in some time, and we did have a mobile breakout on Tuesday with the big up move on the market. What else can we look at? Small cap 600 looks a lot like the S&P 500, certainly at a nominal new high. Everything is green, but with a red candle high here, which is a very common thing that I saw this weekend. NYSE Composite, same story, at a high with a red candle high. Sort of starting to look a little tired there. If I look at the NASDAQ, you'll see, again, pretty much two bars stalled at the same high of the day, red candlesticks, red candle high on Thursday. Just looks like a tired market, but one that's still above that 8-day exponential moving average. And as long as it stays up there, in the words of Steve Bigelow, continue to go long. But I'm going to be watching that 8-day exponential. If I want to see weakness, I can take a look at gold and say it's not so bad. It's been bouncing around here, closed right at the 8-day exponential, still above the 17 and above the 200 and above the 50, which is rising and should cross over the 200 in the next month or so. If I look at silver, we'll see not so good, and that silver is already broken down below that 200-day moving average and failed at it when it traded up to it on Friday. Volatility, an interesting story here. Volatility has not dropped to the same level it did with the prior market rallies. And it had a big well, not a big update, but it had a big green candle, even though it dropped some on Friday. So is volatility coming back to the market? I think it's interesting that we didn't take out the prior lows in volatility. We've got major resistance here with the 200, the 50, and the 8-day exponential. And I suspect the 17 is in there as well, sitting right above you. But if you can get above that point, then you'll have a lot of support, and that could be a base to move off of. So as George Lee has taught me, when this VIX starts rising is when you want to be unloading stocks. When VIX is falling, you want to be buying. I like it when the VIX is dead. I can be buying here as well, but I'm very nervous why this VIX didn't take out the same as the previous low. Oil has been moving up, and therefore it's up near the top, although it did pull back from Tuesday or Monday's island reversal. Still held up at support here at the confluence of the 8 and 17-day moving average. So I'm probably not getting you too excited on my market analysis. I think that the market is where it's been. It's due to correct, but it keeps going up, and you take and play the market you get, not the one that you think you should be having. 145 industry groups here. I want to look at what's really moving right now and not what's been moving over the last month or so. So let's look at 2-day force up, and you can see I dropped down to 54 groups. So this number has come down compared to the 80 last time. What's not working? system software, internet software, metals and mining, gold, automobile manufacturers. Tesla sold off some. Semiconductors, steel, oil, gas storage, refiners, even railroads have sold off. Construction materials, building products have also been weak. And I can tell you from my review, home builders are also weakened compared to where they were when we were having our New York meeting a couple weeks ago. Here's the strength. So let's just take a quick look at these electrical components and equipment. Let's talk about these. I have no idea what fuel cell technology is. I know that there's Ballard, there's fuel cell, and there is plug, and they all look like this. I was fortunate enough to get into plug on this Bible gap up back here, I think. This looks where I got into it. I thought it was closer to 390, but I got into it back in this area. And I've had a nice double in 10 days. It's not on the basis of earnings. This is pure momentum, and it started moving when Tesla spoke about building a factory and also about some of its battery technology. I don't know how you buy this stock right now because it's super extended, but you could have said that several times. So you might see something like this week where you actually get a couple-day pullback and some digestion before it runs again. Emerson's an old name. Pull back to the 200. It's still below the 50. Look at the group strength here in this line. Mobile breakout from a squeeze. DI crossover, mostly green above. Pocket pivot in this light blue. Decent average volume. Emerson looks like it wants to go higher. I don't like to go too deep below the index. Let's move to the next one. Oil and gas exploration. I didn't feel that good about these as I was looking at the chart, but there were a couple that stood out to me that I thought were interesting. If you look at the best in Southwestern Energy, you'll see a pattern that's repeated in almost all of them. And that pattern is, let me see if I can fix this, that these stocks have been in a pretty profound pullback, bouncing off the 50. Certainly an interesting time to get long this name. Doesn't have much in the way of earnings per share growth. Was coming out of a squeeze with a kahuna. Cinerex Energy broke off the 50 going back beginning of last month. Ran up, pulled back a little bit, had a pocket pivot. A little bit nicer short-term earnings, not much long-term. I like, where is it? Hello. This is one of Gil's favorites. He likes the name. I like the chart pattern's not too bad. It's lower left, upper right. It's a little bit extended, but it's pulled back some, bouncing off the 17-day. You see the group strength. This is called FANG, and I'm an earnings lover. You can see the earnings per share growth that this stock has. Pick your favorites. Oil Explorer, oil and gas look like they continue to run higher. A lot of people like KOG for the cheaper ones. I mentioned strength in apparel retail. We'll take a look at the first three there. All of them made my list, and then I'll comment on Gap. Foot Locker, Bible Gap up on Friday, massive volume, kahuna, everything is green. Bible Gap up rules apply. If you don't know what that means, come on Saturday, let Gil teach you about how to play this in an uptrend. You'd rather buy it within 4 to 5 points of the gap up point, so you probably are getting close to being too late. It'll be interesting to see if this gives you an entry this week. Stage stores, don't know much about them except broke above the 200 and then a big up day on Friday. All of a sudden, huge volume have come into the stock. Bible gap up, a couple series of mobile breakouts out of the squeeze. The volume is interesting to me. I would do my homework and figure out what's happened here. But this stock looks interesting. Changed stripes. I actually put that under in my buy list as a potential special situation. The volume is impressive. DSW, a similar chart pattern, breaking above the 200. The stock's been in a downtrend. You see the group strength here. This is a pocket pivot. Everything is, except for the weekly bongo, is green. I think the stock has room to run. I can tell you, I was in a store recently, like last week. I helped their earnings as an individual, but their stocking was the best I've seen in a long time. When I worked in retail, when I was just a little boy, you knew when we were in financial trouble because we had nothing to sell. Their stocking was great. Gap had horrible same-store sale numbers, traded down to the 200 and held. Ended up the day with a pocket pivot on huge volume. It's an interesting question, Mark. Holding at that 200 with that kind of volume and considering the bad news, I got to feel that was the last of the bad news and the stock is going to trade up. So you might want to take a watch of Gap, especially with apparel and shoes and retail seeming to be wanting to go higher. Regional banks, they've been showing up a lot. We could look at 30 of them because they all look similar. We'll look at the first couple. This is KeyCorp, and you can see after getting close to the 200, broke last week above the 50. Pocket pivots end of the week, lots of volume coming in, everything is green. These are companies that win with the rising dollar, rising interest rates, and probably they win just as time goes on and they get further away from government related issues from the bailout. Regions Finance, same picture, although it didn't get much below the 50. Nice scoop pattern it wants to run, everything is green. SunTrust, same exact picture. This is why I like top down because they all look very, very similar and look very attractive. You might want to go out and look at some of the ETFs for regional banks since the banks look so similar. I mentioned earlier auto parts. So Ballard gets in here, and then we're going to look at a couple of the others because it's not just Ballard that looks good. So Ballard, to me, is similar to Fuel Cell and Plug in the same business, and you can see a similar move, and this is what I think I might see this week on Plug, is a little bit of a pullback before it runs again. Bible gap up, everything is green. Look at the volume that's come into the stock over the last couple of weeks compared to before. Something has happened here, cheap stock, do your own research, has revenue, doesn't make a lot of money. So the more traditional Genthem is a auto parts an equipment manufacturer, Northville, Michigan. Well, lower left, upper right. You want to buy this one probably back here when it broke above the 50, but in a nice uptrend, probably extended, as you can see the high jump up at the top here. So probably a little late on that. Magna International, I know one of our users or listeners works for them. Send me a note, tell me if I'm right, but it looks like they've got some great earnings per share growth. A little bit high jumpy looking, and maybe it needs to base here for a while and let the averages catch up, but volume coming in here, that looks strong. Johnson Controls, not nearly as strong, so we're going to skip that one. Lear, I guess they make seats and other things in the cars. Vehicle seating requirements. Uptrend, moving up as well. I mean, there's a lot of these. Here's Tenneco, again, breaking out, moving up, makes money with earnings per share growth. Dorman, Modine, Visteon, Tower, all these stocks look interesting. Here's one closer to the 50. It's got money, earnings per share losses, so I'd probably stay away from Visteon or be less interested in Visteon. Who knows, it may be the best of the bunch. Number 6, department stores. Interesting. JCPenney's probably not interesting to me, but what about Macy's and Kohl's and Nordstrom? So we'll look real quickly and see if we can make any comments. Everything is green on JCPenney's. It had a red candle high. It's way below the 200-day. I'm not interested. Macy's, big move off the 50, 1, 2, 3, 4, 5, 6, 7, 8 days ago. Everything is green. Had a Bible gap up here and has respected the gap up point. It's got earnings per share growth. That looks interesting, especially get a pullback. Cole Brothers, not nearly as interesting. Got a lot of overhead supply. I'm going to skip that one. Nordstrom will look a lot like Macy's, breaking out here. Had a mobile breakout on Friday. Everything is green. Might be also one to take a look at. Not much in the way of earnings per share growth. This is top-down investing. I usually pick 10 as the groups to look at, and we are in number 7, general merchandise stores. Big Lots is the leader here. Earnings, I believe, stock was up $5 at one point. Let's see how it fit, up 21% on the day. It becomes an interesting story. You have support here. You know where to put your stop below the 200 if you want to play this. Huge volume and a kahuna. Group rank, or group strength turning up. MOBO breakout and a Bible gap up. Everything is green. Just don't like the earnings per share growth. Dollar Tree, not that exciting, although a breakout from here would be, as it's sitting on a confluence of the 200 in red, 50 in blue, 17 in green, 8-day exponential moving average. Fred, I think this is a potential merger and acquisition candidate, so we're going to skip it. Next one down in the top 10 will be aerospace and defense. A lot of expensive stocks that have been on long runs and continue to look good, and I think you'll see a similar pattern as we look at them. Honeywell, lower left, upper right. Everything's green, but red candle high here, getting pricey. Aerotech is a cheap stock. I made it up here. Unfortunately, I get stopped out. It's making a run again. Look at the volume. I may be looking closely at this stock this week. Tons of volume, moving up, Bible gap up, everything is green. Makes money, small stock, but in a great industry group. United Technologies looks like the last one, lower left, upper right. Big stock, big move up. Raytheon, same thing. These are all expensive stocks, all in major uptrends. Group number 9, apparel, accessories, and luxury goods. VF Corp is historically a very expensive stock. They must have done a big split because it's down to $60, so maybe a 4-for-1 split. Pulled back, got above the 50, so we got a W here and a breakout. Pocket pivot turning green there. Makes some money, or makes money, but not much in the way of earnings per share growth. Trades at a multiple of 22, pays a 1.7% dividend. Has been a big leader. You can see the group strength is coming in. Might be one to keep your eyes on. Ralph Lauren below the 200. We'll skip. Coach also below the 200. I don't love these other stocks, but I did like the first one, which was VF Corp. And now we're on to, I think, number 10, which is aluminum. Such an exciting group. Just take a look at Alcoa, and then we'll move on. Interesting with the other miners being in the down group to see this as a top 10. And I guess you could see a little bit of a cup and a handle. Everything is green. Earnings coming into the stock, not my cup of tea, but certainly is one that you might want to investigate. So I've looked at top down, bottoms up, we looked at the groups, top down on the negative side, we looked at what groups were there. And so normally I would have put together a buy list of some of the stocks we looked at, and now I'm going to want to supplement it with a bottoms up perspective. So for bottoms up, here's a couple of things that I like to do. I open up my warehouse, and the first thing I want to do is go into the smart groups, open up my name, and let's see how many red candle highs we had. 273, including the spiders. How many green candle lows did we have? 12. What does that tell me? It tells me the market is pricey, and we have a lot of stocks rolling over. What did we see green candle lows on? Shorts, shorts, beat up stock, shorts. So the short positions and some of the junk had little reversals on Friday. How many MOBO breakouts did I have? I only had 25. I limit here. That's not a good, fair question. Hold on a second. I left my filter on, or my warehouse view. I need to go back to a warehouse. All right, so we got, forget the numbers. I limited to 25 there. MOBO breakouts, MOBO breakdowns, you could look at those. Breakdown from a squeeze and breakouts from a squeeze. These are sources that you might want to look at. I could tell you that FNSR looked interesting in my review. Our MBS looked interesting. EBS looked more than interesting. JASO looked interesting. Skull had a good week. So there's a lot of good stocks sitting in this list as well. So the next thing I'll do is I may look at some of those. Then I'm going to go up into my reference group, all securities, and I'm going to go find my sprinters, which will be under HGSI strategies, Woodward and Brown top-down, archive. Then you go into reference library, into miscellaneous. And you'll have a list. See all this green? A sea of green. These are good stocks, mostly bongos, both ways. And I'll start looking at those. So we could look at a few of these real quickly. Now, we're looking bottoms up, so we're not necessarily looking at where the money is from strength of industry. Rockwell Automation is a electrical components. We would have seen that if we kept looking, lower left, upper right. Everything's green. Pocket pivot, buy point, perhaps on Friday. Praxil, all of the CROs looked very good. These are clinical research organizations. They get paid by pharma and biotech to develop drugs for them. They're outsourcers. They're cheaper than doing it themselves, and they're probably going to do well with Obamacare. E-commerce, dang, they had earnings come out, kept running up to 19, started the week at about 10, or started 10 days ago at 10. So a big move on earnings, a Chinese stock. Here's my plug. Magna, we looked at, is one of these, this is an automobile OEM parts manufacturer, a little bit extended here, but great earnings per share growth compared to others in the group. I mentioned truckers, and we'll look at my buy watch list in a few minutes, but several truckers look good. This is Swift. Take-Two, leading stock, gaming stock, don't know much about it. Here's Fuel Cell. This is the other one in the Ballard, Plug, and Fuel Cell trilogy. Again, it gave a little bit of a stutter and pullback and ran again. Very cheap stock. Plug was this cheap of a stock a few days ago as well. So I might go down and look at most of these stocks. One of the truckers I liked was Arkansas's Best, and that's right here. Just take a look at why I like this one perhaps a little bit more. Bunch of pocket pivots, all green, great volume coming, or great earnings coming into the stock. Certainly not overly extended. This is one that I thought was very attractive and made it to my buy list. Besides sprinters, another thing that I like to do is go into designer, tools, group inclusion report, and as we talk about every week, the smart groups are pre-formatted groups that come in HGSI that are already have filters and ranking modules built in, and you could use these to fish for great stocks. You may just want to look at them, remember how well Best of Woodward and Brown did over the last week. So I clear, and let's pick some of my favorite groups. From Ghilardi, I like his sprinters. I want Best of Woodward and best stocks under 15. I want demand, growth. I want growth. HGS 100 leaders, QEP stocks and groups to upside, and small stocks and groups, EPS, and then turnaround. For my group, I want breakout from a squeeze, green candle lows, and pullbacks to the 50-day with the kahuna, my pullback to support scan. From Morales and Catcher, I want to look at bottle gap ups and pocket pivots. So now I found that, and then in my list, let's just pick Market Smith 250. We're going to make a group here. We're going to call it Saturday Web Gems. I only want to look at the 10 winners and hit OK. So it's now gone into those groups and it's tried to see how many times each individual stock is listed. The stock that's in the majority of the groups will be the one that's the highest. It'll open up a file here and you'll be able to see that some of the top stocks based upon those pre-made group inclusion filters include YY, Qihu, Phoenix, Take-Two, eHouse, Electronic Arts, Myriad, here's that Arkansas Best, and Dane. Do you notice anything about these stocks? Chinese, 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 Chinese. China is all over my list of great stocks right now, and that isn't always a good feeling because you know that China can move overnight against you. Solar Fund is another one that's up here. I don't think Qihu is Chinese, but it might be Chinese as well for all I know. I think it is actually. Let's look at what came out as the top 10. So this is another way of finding leading stocks. So I'm going to take a look at this, and then I'm going to look at my buy watch, and we're going to say goodnight, and it looks like we're right at about an hour. Arkansas Best, trucking stock, one of my leaders. It's on my buy list, lower left, upper right, couple of pocket pivots, looks very viable at this point, good earnings per share growth. Ballard Power, like plug and fuel cell, sort of on a climax run. We don't know how much more before climaxes, buy at your own risk. Dang, I think, goes further. Just look at what happened with VIPs. It's a growing e-commerce site in China. Did have a huge move. It's at the high jump, so beware. Look at the volume that came into the stock after that last earnings. eHouse China actually does have earnings. One of the reasons why I use MarketSmith is because there'll be things like this that I can get probably more accurate earnings from. I knew that was going to happen. Hold on a second. I use such a small lower resolution for this than I normally use, so I get issues with my screens. EJ, 85 cents for 2014, growing over 40 times. If I take that 85 cents times 30, I got a $24 stock. It's trading at 16. Do I think it can go higher? Absolutely. It's on my buy list. Electronic Arts, we showed you Take-Two Interactive. We'll probably show it to you again. Something's going on with gaming stocks, perhaps the launch of a new PlayStation and Xbox ultimately will lead to more games. Lots of pocket pivots, not overly extended. Myriad Genetics, this is a diagnostic testing. They had some great news. They do some testing for hereditary cancer. Probably the biggest clue I could tell you is if your loved ones get diagnosed with cancer, make sure your cancer doctors do a good multi-generation family history, and that if you have a young person with cancer or multiple family members or anybody with ovarian cancer, frankly, those patients need to be studied with Myriad's test looking for hereditary cancer. It can save their life and maybe yours as well. It's because of that good press that's propelled it here. Pull back a little bit. I think this goes much higher. Everything is green. Mobile breakout, but it is getting up near the top of its high jump bar. Feng is another Chinese stock, broke out of some congestion this week. Pulled back on Friday. If it opens up on Monday, I find that interesting. Lots of volume coming in. Everything turned green. Great earnings per share growth. Qihu, not Chinese, based in Santa Fe. Okay, sorry Qihuians, you are not Chinese, but you had a great basing period from September until the middle of January, taken off. Everything is green. You had a red candle high. Maybe it's time to take a breather, but you've got amazing earnings per share growth, and I think you ultimately go higher. Take-Two is that other gaming stock. We've already mentioned it. And YY is a Chinese internet play, online group, social platform. Maybe it's a little bit like their Facebook. Look at its earnings came out on the 4th, and it continued to run. Everything is green. It too had a red candle high on Friday, which is worrisome, but look at the earnings per share growth. Unless you have fraud and major multiple contraction because of the world changes in economy, when you see earnings per share growth like this, and you go, let's just pull in MarketSmith for completeness sake, because it looks like there's great earnings still coming. And you see a stock that's going to make 230 in 14, 318 in 2015, trades at a multiple of 54. Even if it comes down to 40, it's a $127 stock this year. So I think that this stock has plenty of room to go, and it's one that's a pretty significant holding of mine. You want to buy it off the 50 or pullbacks to the 8 or 17, you've had a couple of opportunities in recent era. So let's just go up to my buy list for the week, and let's see if there's anything that I haven't mentioned that maybe I should. Yes, this is where I live. Actually, before I lose it, my condo is this one right where my arrow is. We got an old thing that they're going to replace here, and then an old thing on this side. But this is mine. We have the 17th floor. We've got the ocean in front. We got the intercoastal behind. Pretty cool place to live, and awesome weather. But you can figure that out. We live in Florida. So here's my buy watch list for the week. I'm not suggesting that you buy any of these. All I'm saying is that on my exhaustive review of looking at charts, these are the things that I came up with that looked attractive. So we looked at Foot Locker already. I don't know what to do with Agerian Pharmaceuticals, to be honest with you. It looks like crap, but it had a bullish engulfing pattern on Friday with massive volume and a kahuna on a stock that's off about 50% from its high. They have some ongoing FDA and Department of Justice issues, all related to the big mouth of the CEO. But it makes money. It's got marketed products. It's early on in its growth phase. I'm going to keep an eye on that one, but it's sort of a special situation. Emergent Biosolutions, what a beautiful lower left, upper right, broke out on earnings, mobile breakout out of a squeeze with a Bible gap up. I think this is a play for this week. Bible gap up rules in effect, all green on the technicals up there. Bid is another one I liked. A little bit deeper pullback than I would want, but it's moving off of the 200 here. Had a kahuna on Friday. I like to see it get above the 50 and hold, so I'm going to be watching it. I'm not, just because I got them on this list doesn't mean I'm going to buy them right away. Jazz, I think, is setting up for an interesting opportunity. Jazz pulling back to the 50 has been a buying opportunity in the past, and it touched the 50 on both Thursday and Friday. If it trades up on Friday and gets above that 8-day exponential, I'm probably going to want to stay long or go long on Jazz. I mentioned the bulk shippers look strong. Here's Safe Bulkers. Makes money. Pull back on the 50. Looks like it wants to run. Everything is green. Mobile breakout out of the squeeze with volume coming into the stock. Don't know anything about Horace Mann Educators. I believe it's more insurance. Pretty deep pullback to the 200, which held on multiple times. 50 was resistance. They got through it on a kahuna on Friday with mobile breakout from a squeeze. This looks interesting. They've got earnings per share and some growth. Questcor, the stock, I kept telling you that the shorts were going to pound it down to submission, and they did. And that happened here. Usually it's a good place to be buying it when it's close to the 50. But I think with all the commotion from the shorts, I'm probably going to pass on it at this point. Trina Solar is a solar stock that had great earnings. There's been some discussion on the board whether to be long or not in solar. Here's what I like about solar. TSL, right? It's been a dog for a long time, okay? But it's been coming back for the last year. What do I like about this stock? Broke out of some resistance here. $1.67 coming in. Give me a multiple of 20. It's a $32 stock. It's trading at 18 now. I think that stock goes up. Jinx Solar. Look at the earnings per share growth on this stock. Give me 14%, 14 PE on $4.75. Among friends, you're getting above $60. It's trading at 35. JASO, not nearly as attractive, but turns positive in 2014. SunPower, growing 30 times, $1.64. Perhaps it's already priced into the stock. I think this one goes higher as well. And then the one that blew up this week was Canadian Solar, and now it's in some chop around here. But look at these earnings per shares coming into 14 and 15. Now, the problem with looking at earnings per share is when it doesn't hit the earnings per share. Hold on. Lexus, can I call you right back? I'm on my webinar. I'll call you back. Sorry about that. When they miss the earnings per share, they fall. And they missed because of weather. They fell right back to the 50, which might be a good place to be nibbling on this stock. So I like the solars because I like their earnings. And one of the other energy stocks I liked is Bonanza. Look at the earnings per share growth. Broke up. You've got everything going the right direction. The 50 crossed above the 200, the 17's above the 50, the 8's above the 17. The stock is right above the 8. In an uptrend, a little bit of a pullback. Group strength is there. I like the earnings per share growth. And I think, here's my favorite little biotech, little pharma stock. Obviously, it's extended. There have been two great runners in this genre. One has been Horizon Pharmaceuticals. It doesn't make money. One of these days, it's going to stop being such a beautiful stock. Let me just check one thing. HZNP. Just looking at the earnings coming. They're supposed to make 20 cents in 2014. Be interesting to see. But what a beautiful chart. Move up, base, move up, base, move up. So it's due to have a base before the next up move. A stock that's been similar this year, which is Arrowhead Research, and you know, it's had some junkiness here and a little bit of a sell-off after Bible gap up this week on Wednesday. Let me show you a couple of things about Arrowhead Research, and then we're going to say goodnight. ARWR doesn't make any money, so that's worrisome. It's this RNA story that's exciting, and all the RNA companies this week started moving. Now, what's kind of interesting, ARWR, you're going into just a massive period of seasonal strength for Arrowhead Research. 8 out of 10 years positive, average up year 23.9%, average down year 2.5%. From April 21st to May 2nd, it's just a 50-50. But until you get into the middle of April, from middle of March until April 1st, you're going through the strongest period of the year for Arrowhead Research. So that might be something to take a look at. So on that note, let me just, I guess, scale through this very slowly. You can stop it at any time if you want. The only thing that's missing off the bottom is Canadian Solar. These are, oops, take that off. These are the 62 stocks that I thought were interesting, and many of these will be on my buy list. And on that note, I'm going to shut off the tape and say good night, and remind you that next Saturday, actually let's just go to the website real quick, that I will be sharing the web stage with my friend Gil Morales. And if you go to highgrowthstock.com, free webinar Saturday, March 15th, 1 to 2:30 Eastern Time, 10 to 11:30 Pacific. And Gil and I, and we look forward to seeing you. And you all have a great night. And I'm sorry for the lack of picture in the beginning. And thank you. Good night, everybody.